How much does it cost you to hold on to an investment property? And what are the fruits? What do you get at retirement out of it? So I'm going to articulate that for you right now. Hamish from monline.co.nz. Firstly, a couple of assumptions. We're going to use a long-term capital gain rate of 6.1%, which is kind of typical for New Zealand. Now, also, we're going to use a 5.5% kind of long-term interest rate as well for this example. Imagine you buy in Auckland somewhere around 700, 750, right, in this example, and your rent is somewhere around, say, 650 a week. Okay, that represents about 4.5% gross yield. You can get as low as 3.5% really in Auckland, depending on the area. And it can be higher, but you typically probably need to do a do-up first. And we are going to have a quick look at some of the costs and expenses here. Maintenance, rates, insurance are things you've got to consider. We'll also have a quick look at what happens for outside of Auckland and if you get a slightly higher gross yield as well. But in this example, let's feed all that in and see what we get. So in this example here, you would expect cash flow shortfall of roughly around $467 per week to begin with. Now that's interest only for a few years, and then after interest only, if you don't extend it, you could expect to pay about $596 a week from your pocket to hold on to that property. Now, what are the fruits? What do you get out of that? If you're approaching your 50s now, when you buy it at retirement, you should expect approximately about $840,000 in capital gain, which seems amazing, but that is using the long-term averages. So now, in saying that, what about if you can't afford this amount? Now, this is an example where you're using no deposit. This is using your existing home as equity. If you have existing home debt, sometimes we can stretch the term on that if you feel it's worth it, if we think that paying more interest on your own home would still make it worthwhile to try and gain $800,000 more in retirement. So there are things we can do to make the overall cash flow more comfortable. But in this example, let's have a think about what about if we were going outside of Auckland, right? So typically outside of Auckland, you could spend a lot less. In this example, let's say you were spending something like $600,000 instead. And so your debt would be lower as well, obviously, $600,000. But rent, you could expect a lot lower, but actually not that much lower. So we have seen returns of around 5.2% out there in smaller towns, still with more than 50,000 people living in there. Now, in this example here, you could expect suddenly you're paying closer to $350 interest-only period. After the interest-only, possibly about $460 to hold on to that property. Obviously, the gain you get, the fruits you get at the end is going to be different. At age 65, it might be closer to $670,000. Again, not a bad way to boost your retirement savings up using something like this. Now, this is very general advice. So in terms of the actual reality of like what is happening in your own situation, we can fine-tune some of these tools that we have on hand now to give you a much closer picture of what could happen. So yeah, and also you can talk to your own financial advisor, a good one like ourselves, to really get a good handle on what you're really getting into. These days, I think, this is an example using older houses. With newer houses, you will have less maintenance, but then of course you've got to consider with newer homes, you're potentially going to be compromising on the land size, which may have an impact on the actual long-term capital gains as well. So those are things you got to weigh up what's suitable for you and your family and your actual cash flow. It's really, it just comes down to making it comfortable, because these things only work in the long term. The gain is not always linear, even though this graph seems to show that, but sometimes you can go through a slow patch. So you got to make it so that it's sustainable long term, because it's only over the long term that you really get the fruits of this type of exercise. So thank you for watching. Hamish from monline.co.nz.